Very good morning, everyone. So let's start with the practice session for house property. Um, if you look at the question number one, Rishi, my screen is visible.
No, sir, it's not.
Okay. Is it very good morning, everyone? So let's start
Yes, sir.
with the practice session for. Okay. Question number one says Aditya, a resident but not ordinary resident in India. Aditya is resident but not ordinary resident. Okay. RNOR. During the assessment year 25-26, he owns two houses, one in Dubai and the other in Mumbai. Okay. See, if he is a resident but not ordinary resident, what does it mean? It means that his global income is not taxable. For ordinary resident, global income is taxable, but for not ordinary, global income is not taxable. Any income which is arising in India or it is received in India, that can only be taxable, or if it is controlled from India, then only it can be taxable. So it means that his Mumbai house can be taxable because this Mumbai house income would be arising in India, but his Dubai house is outside India. So this income should not be taxable unless and until it is received in India. So if it is received in India, then we can tax it. Otherwise, we can't tax it because he is resident but not ordinary resident. Okay. The house in Dubai is let out at a rent of DHS, that is Dubai dirhams, 20,000 rupees per month, and 1 dirham is equal to 18 rupees. So they are given in foreign currency. So what we will do, we will calculate everything in foreign currency, and then after that we will convert it into Indian rupees. So his Dubai house is let out, but his Dubai house is let out. But if he is a resident but not ordinary, this income could not be taxable unless and until it is received in India. Now the next line says the entire rent is received in India. See, this line is important for us. The entire rent is received in India. Now, since they have specifically mentioned that Dubai rent is also getting received in India, so in that case, this income would be taxable from Dubai as well. I believe you all are okay with this. Now, he paid property taxes of dirhams 2,500. And sewerage taxes of dirhams 1,500 for the financial year 24-25. So these are municipal taxes. These are the part of municipal taxes, property taxes, sewerage taxes. What is sewerage taxes? See, our municipal corporation provides us with various facilities for water, etc., for sewerage facility, etc., and they charge. That is called municipal taxes. We pay municipal taxes to them. So property tax and sewerage taxes, they both are municipal taxes paid to Dubai Municipal Corporation. So can they be subtracted from GAV? The answer is yes. If you are taxing this income, if you are making it GAV, even the municipal taxes which are paid outside India, that are also allowed. Okay. The house in Mumbai is a self-occupied house. So they have given that the Mumbai house is a self-occupied house. Okay. He has taken a loan of 25 lakh rupees to construct the house on 1st June 2021 at 12%. So in June 2021, he has taken a loan of 12% for this house, and it's a self-occupied house. The construction was completed on 31st May 23. Okay. And he occupied the house on 1st June 2023. Correct? Our year is previous year 24-25. So last year only the construction was completed and he occupied it last year itself. The entire loan is outstanding as on 31st March 25. Property tax paid in respect of the second house is 2,400 for the financial year 24-25. For the second house means Mumbai house. So for Mumbai house he has paid 2,400, but it is a self-occupied house. Now we understand if it is a self-occupied house, the NAV will be taken as nil. Correct. And if this guy is following default tax regime, we will not give the deduction of interest also, interest on borrowing for self-occupied property. But if this person is following optional tax regime, then we can give the deduction maximum up to 2 lakh rupees because he has taken a loan. Compute the income chargeable under the head income from house property in the hands of Aditya for the assessment year 25-26, both as per optional regime as well as default regime. So this question is asking us to calculate the income as per both optional and default regime. Now, only the house property income we need to calculate. So we'll be calculating for Dubai house also, because although he is a resident but not ordinary, Dubai house should not be taxable. But this important line has told us that the entire rent is received in India. So because this income is getting received in India, therefore we have to tax the Dubai house also. And also the Mumbai house, although Mumbai house is self-occupied, NAV we will take at nil, but we will consider that as well. So Mumbai house also we need to calculate. Okay, so let us calculate. So first calculate through by optional regime, and then we can show by default regime as well. Everybody is okay with till here? Everybody understood the question or not? First of all, tell me.
Understood, sir.
Why we are taxing Dubai house? Understood?
Yes, sir.
Because it is getting received in India. Okay. So let us write the solution. Computation of house property income of Aditya. This is assessment year 25-26. They are telling us with both the regimes. So let us first calculate by optional regime. Now we have two houses. What we can do, we can make two columns for both the for both the things. So one is for Dubai house, we can make the column, which is a let out property. And for Mumbai house, which is self-occupied. Everybody with me. And Dubai house, everything is given in dirhams, DHS. For Mumbai, it is rupees. But finally, first we will calculate to dirhams. So if you want, you can directly calculate in rupees, but you have to multiply everything by 18 rupees. They have given to us that one dirham is equal to 18 rupees. So if you want, which I will not suggest, so first of all, you can start converting everything into rupees, but it is better that first of all, calculate the final amount of house property, then only one time you have to multiply it by 18. So it is better to save your time. So first of all, I'll be calculating everything in dirhams. Then thereafter, I'll be calculating into rupees by multiplying by 18 rupees. They have given the conversion rate also. Okay. So we understand the format for house property is very easy. We start with GAV minus municipal taxes paid. Then we get NAV, net annual value. And from net annual value, you deduct 24A standard deduction, which is 30% of NAV. And you deduct 24B, that is interest on loan. And after that, we get our house property income. This is the format. Everybody done till here?
Yes, sir.
Yes, sir.
Good. Give me a moment. Okay. Now, let us compute for the Dubai house. See, we understand GAV is expected rent or actual rent, whichever is higher. And generally, 90% of the case in your examination, you might not get the details for the expected rent. So you have to take the actual rent only. So actual rent is the GAV. So let us first concentrate one by one. So let us concentrate for the Dubai house. So for Dubai house, if you will see in the question, nowhere is given the information of the municipal value, fair rental value, standard rent. So we don't have the information for expected rent. So it is only given that the Dubai house is let out at 20,000 dirhams per month. It is per month. And no other information is available regarding rent. So we'll assume that it is let out for the entire year. 20,000 into 12. So 20,000 into 12. This is dirhams. 2,40,000 dirhams. Municipal taxes paid. Property taxes and sewerage taxes, they both are part of municipal taxes. 2,500 plus 1,500. It is not per month. See, if you will see, it is not per month. They have just given dirhams 2,500, dirhams 1,500. So it is 4,000 rupees, 4,000 dirhams, sorry. So 2,500 plus 1,500. 4,000 is the municipal taxes. So the net annual value is 2,36,000 dirhams. We are calculating first for the Dubai house, and 30% of the NAV you can deduct. $70,800. Interest on loan. Okay, was there a loan? The answer is yes, there was a loan. But with respect to Mumbai house, there was a loan. With respect to Dubai house, there was no loan. So Dubai house, I'm so sorry. Dubai house information, they have completed here in this paragraph only. So in this paragraph, they have not mentioned anything about the loan that we have taken from for the Dubai house. So the loan would be, interest on loan would be 0. It is 1,65,200 dirhams, DHS. Now we got the final figure in dirhams. This is the house property income. Now we can convert this into rupees. By multiplying by 18, they have given the conversion amount also 18 rupees. So this will become 29 lakh. Let me know if my calculation goes wrong somewhere. Guys, are you okay with this? 29,73,600. Everybody? Bala, Sugandha?
Yes, sir.
Okay.
Yes, sir.
So we got the property income for the Dubai house. Let us calculate for the Mumbai house one. Now Mumbai house is a self-occupied property and we are following optional regime. We don't start with GAV. The self-occupied property starts with NAV and its NAV, net annual value, would be nil. Correct? Standard deduction 30% of NAV, 30% of nil, of course, is 0. Now interest on borrowings. Now we understand that interest on borrowing has two parts. One is current year borrowing. Second is if there is any pre-construction period, then 1/5 of the pre-construction period interest also. So let us make a working note for interest on loan, because here we don't have a space. Working note. So I am making a working note number 1. Interest on loan for Mumbai house. Okay. So we understand interest on loan has two parts. First is current year interest. When I say current year interest, I am referring to our year, which is previous year, 2024-25. So how much is the interest for the current year? Current year means previous year 24-25, our year, which is actually applicable for our examination. So in this year, first of all, ascertain whether, please ask yourself whether there is a loan or not. And if there is a loan, how much was the outstanding? Was it same throughout the year, or whether the outstanding was changing throughout in any part of the year or not? So just see whether there is a loan or not. So they have actually given to us that he has taken a loan of 25 lakh rupees to construct the house on 1st June 2021. Guys, right now I'm concerned with 24-25. Was there the loan or not? So they have said to us the assessee has taken a loan in 2021. Okay. At 12%, 25 lakh at a rate of 12%. The construction was completed on this date. Okay. And he occupied the house on 1st June 2023. Last year he occupied it. The entire loan is outstanding as on 31st March 2025. See, this line is also important for us. The entire loan is outstanding till 31st March 2025. What is 31st March 2025? This is the last day of our year, of our current year. Everybody agree? So can I say that this line is actually giving me the answer that there was a loan in the current year also? Correct. And the entire amount is outstanding. So 25 lakh into 12% is the current year interest. So for 1 year interest this year, the loan was 25 lakh at rate of 12%. So I believe it would be 3 lakh what? 3 lakh. This is the current year loan. Second 24B, second part is pre-construction period interest. So whether there is a pre-construction period interest or not, whether we are in the first 5 years, the answer is yes, because the property was completed last year. So this is the second year. If you will see, the house was completed. Arup, you are getting it?
Yes, sir.
The house was completed on 31st May 2023. In which year it was completed? It was completed in year this date belongs to. Previous year
23-24.
Correct. Previous year 23-24 this date belongs to. And our year for which we are doing calculation is previous year 24-25. So this was the first year when the house was completed, and we are in the second year. Even if we would have been in the second year, third year, fourth year, fifth year, I would have taken pre-construction period interest also. Since we are in the first 5 years, here in the second year, so I have to take the pre-construction period interest also. Now, please tell me, the pre-construction period starts from where? From the date of the loan. When we have taken the loan was taken on 1st June 2021. Okay. And it will end on which date? The year in which the house is completed. The year in which this property is completed. Don't take that year, just prior to that. So just see, this year is starting from 1st April 23. So just go 1 day before that. So up till 31st March 2023 is the pre-construction period interest. So from the date of the loan, from June 2021 till March 2023. Guys, are you okay with this?
Sir, the construction is completed on 31st March 2023. Then we should take 31st March 2022.
Bala, you are saying if this would have been which date?
31st March 2023.
If this would have been 31st March, okay. Instead of May, it would have been March now, you are saying?
Yes, sir.
Okay. If this
Then
would have
also we
been
should take-
31st, correct. You are correct. If this would have been 31st March 23, so you have to see that this date belongs to which previous year? So it belongs to previous year 22-23. Then your pre-construction period will end on just 1 day before this, 31st March 2022. Correct. This is
sir.
what you are asking, Nabala?
Yes, sir.
Okay, good. So this would be 1/5 of pre-construction period interest. So 1/5 pre-construction period interest is from 1st June 2021 till 31st March 23. And you have to see whether, see, in this question, it is quite simple. The outstanding is same in this period. There might be cases the outstanding might get changed if you are repaying something. But in this year, you have, in this period, you have not repaid anything because the outstanding is intact 25 lakh. So first of all, just determine that how many months are there. So how you will determine, it's very easy to determine. Just generally, I follow calendar year method to determine it. So it is 2021, 2022, 2023. So just see how many months are there. In 2023, January, February, March is there. 3 months. You can calculate by any of the method. This is 12 months. 2021, I believe it is from June onwards, na? 7 months. Are you okay with this? 19.
Yes, sir.
It is 22 months actually. Guys, my calculation is correct or not? 22 months?
Yes,
So
sir.
you will do 1/5 into 25 lakh is the loan, which is same during this period, into 12%. This is for 12 months. For 1 month is 1/12 into 22. So you are getting 5,50,000 divided by 1/5 because in 5 equal installments. Guys, is it 1,10,000? Okay, good, Sugandha. So 3 lakh here, 1,10,000 here. So total it is 4,10,000, guys. So I know that for self-occupied property, the interest is coming as 4,10,000. Had it been a let out property, I could have taken 4,10,000 entirely. But it is a self-occupied property. Self-occupied property, there is a restriction of 2 lakh rupees. If it is for repairs, renovation, etc., then 30,000. Otherwise, 2 lakh. So here it would be 2 lakh rupees. So there is a loss. In optional regime, we can get this reduction of 2 lakh rupees. So house property income total would be 29,73,600 positive, 2 lakh negative, 27,73,600. Are you okay with this? Everybody done? Correct, Likita. 29,73,600, and after that, it would be 27,73,600. Okay, should we move on? Now, under default regime, see what is the change which will happen in default regime. So I'm not calculating default regime. You can do it yourself. What would have been the change in default regime? Please tell me. If this would have been default regime, tell me in let out property, what would have been the change? You guys tell me. If this would have been default regime in let out, do we have any change or it is same?
Same only.
It is same. So there is no change in default as far as let out property is concerned. So this would be here in default regime as well. And what would have been change in self-occupied, guys? This deduction would not have been available. Correct. So this would have been 0. So in that case, so I'm not calculating for default regime. I think that it is easy. You can easily calculate. So it would have been only this amount would be the house property income. This would have been 0. Are you all okay with it?
Yes, sir.
Good. So let me come to the next question. So I'm not solving this default one because that is easy. You can easily calculate. Okay. Come to question number 2. It says you are required to compute the income from house property. Okay. For assessment year 25-26 of Mrs. Rajni from her house property at Panchkula in Haryana. So she has a property in Haryana. We need to compute the house property income only. The municipal value of the property is 750. Fair rental value is 630. Standard rent is 720 per annum. Guys, please tell me what is the expected rent. It is easy. Municipal rent 750. Fair rental value, whichever is higher, 750. Compared to standard rent, 720, whichever is lower. So 720 would be the expected rent. 7,20,000 rupees. Okay. The property was let out for 80,000 per month for the period April 24 to November 24. So this property was let out from April till November. April till November, I can say 8 months, right? For December, January, February, March, it was not let out. So for 8 months, it is let out. 80,000 into 8 is the actual rent. Thereafter, the tenant vacated the property. Okay, there is a vacancy. And Mrs. Rajni used the house for self-occupation. Okay. Please read the full line. The tenant vacated the property and Mrs. Rajni used the house for self-occupation thereafter. Please tell me, at any point of time, was the property empty? Was the property vacant? Or
No.
as soon as the tenant went out, the owner came in as a self-occupation? So the property was not empty at any point of time. So there is no vacancy. What is vacancy? Vacancy means when the house is locked. Nobody is staying over there. Neither the tenant nor the landlord. But here there is no vacancy. For 8 months, I can say, for 8 months, it is let out. And for 4 months, it is self-occupied. Agree? So for how many months it was vacant? It was never vacant. The landlord came in after the tenant went away. The landlord came in. So there is no vacancy, first of all. Okay. Can I take, my simple question is, can I take the value of this property as nil? Can I take NAV as nil? Because it is self-occupied for 4 months? Yes or no? Everybody tell me. Can I take the value as nil? No. Because we can take the value as nil only when the property is self-occupied throughout the year. It is not self-occupied throughout the year. It is let out for some period. Even here it is 8 months it is let out. I would say that even if it is let out for 1 month also, you can't take NAV as nil. In this case, you have to start with GAV only. Everybody is okay with it? So you have to start with GAV only and you have to put the figures also. You can't take NAV nil. Yes or no, everyone? Bala, Aru,
Yes, sir.
Smriti, Rishi?
Yes, sir.
Got it?
Yes, sir.
No confusion
Yes,
over
sir.
here?
Yes, sir.
Good. Okay. Rent for the month of. Okay. Tell me what is the expected rent. We have just seen that it is municipal value or fair rental value, whichever is higher compared to standard rent. Compared to standard rent, expected rent was 7,20,000. Okay. What is actual rent? Actual rent is 80,000 into 12.
6 sir, 40,000.
9,60,000.
It is
9,60,000.
80,000 into 8. 6,40,000.
It will be 6,40,000.
Okay. Are you okay with this? Am I correct?
Yes, sir.
Okay. Expected rent is this. Actual rent is this. Do we need to compute anything regarding vacancy? No, because there is no vacancy. Whichever is higher, we will take 720. Whichever is higher, we can take 720. There is no vacancy, guys. There is no proportionate expected rent we will calculate because there is no vacancy. Second, they are telling us rent for the month of October and November could not be realized from the tenant. Guys, what does this line mean? Rent for the month of October and November could not be realized from the tenant. What does it mean? What do you know about it? Give me a single word. This is unrealized rent. Everybody agree? What treatment we does for unrealized rent? Whenever there is an unrealized rent, we deduct it from actual rent. So actually, this actual rent should be a net amount. Any rent which we cannot realize, it's like a bad debts. So what we need to do is we need to take actual rent by subtracting that unrealized rent. So 8 months till November it was let out, but for the last 2 months, October and November, when it was let out, the tenant has not given us the money and it was unrealized. So unrealized rent should be deducted from actual rent. So 2 months rent should be deducted if it is unrealized rent. But let me read out full. Guys, what is unrealized rent? There is some conditions for the unrealized rent. There are few conditions. The tenancy must be bona fide. Bona fide means that we have given this, let out this property in a good faith. Second, now we are not able to recover this rent. Third, this person, the tenant who has not paid the money, should not have occupied any other of our property also. Then we can say that the unrealized rent, then we can say that this is actual bad debts. So let us see what this question is saying. So this question is saying one of the strange thing. The tenancy was bona fide. Bona fide means yes, it was in good faith. Good. So this condition is satisfied. But the defaulting tenant was in occupation of another property of the assessee. Guys, please tell me what does this mean? Why they have given this line? But the defaulting tenant, the person who has not paid the rent, was in occupation of another property of the assessee and paying rent regularly. Please tell me what does this line mean?
It is not bona fide.
So we can say that this is not satisfying the condition of unrealized rent. Why? Because one of the condition of unrealized rent is that the defaulting tenant must have vacated any other of your property. So let's say if you have a property in Chennai, and initially he was residing in your Chennai property. You have another property in Madurai. So he should not stay in any of your property, but he is staying in your Madurai property. So this is actually violating the condition of unrealized rent. So whether this 2 months is unrealized rent, the answer is no. Now we cannot deduct it from here because it is not fulfilling the condition of unrealized rent. Bala, Nishi, have you understood it or not?
Yes, sir.
So this is not fulfilling the condition of unrealized rent, so we cannot deduct it. Otherwise, if they would have just simply told us that if they have not given this line, so we will assume that it is unrealized rent, we can deduct. But now they have specifically given that he has occupied in any other of our property. It means that the condition of unrealized rent is not getting satisfied. Okay. She paid municipal taxes 12% during the year and paid interest of 50,000 during the year for the amount borrowed towards repair of the house property. Okay. For the repair of the house property, she has paid 50,000. Guys, how much is allowed for repairs? Tell me how much is allowed for repairs.
For let out property, there is no limitation.
Correct. This is a let out property. Right? So for let out property, there is no limit. Everything is allowed for repairs also. So 30,000 is allowed for repairs. 30,000 is allowed for repairs only for self-occupied. That too in optional regime. For let out, there is no such limit. So entire 50,000 can be allowed. Okay. Everybody with me. Solution number 2. Computation of house property of Mrs. Rajni. Assessment year 25-26. Now, gross annual value. First, we will calculate the expected rent. Municipal value or fair rental value, whichever is higher. So it was, municipal value was 750 and 630, whichever is higher. 750 or standard rent was 720, whichever is lower. So it is 7,20,000 is the expected rent. Actual rent is 80,000 into 8, 6,40,000. And we will not deduct that 2 months unrealized rent because it is not fulfilling the condition. So we can write it right here. You can show it as a separate note or you can write it right here. So I'm writing it right here. Since the defaulting tenant has occupied another house, therefore unrealized rent conditions are not satisfied. So why we are not deducting it, we have mentioned it. Since he is already occupying another property, so we cannot deduct that. So now GAV is higher of expected rent or actual rent, whichever is more. So there is no vacancy. We will not compute any proportionate expected rent or so. So this would be 7,20,000 is the GAV. Now from GAV, less municipal taxes paid. Municipal taxes paid is 12% during the year. So 12% of what? 12% of the municipal value. Municipal value was correct, 750. So 12% of 7.5 lakh.
90,000.
Correct, 90,000. Correct, 90,000. So this is 6,30,000 would be my NAV. Minus 24A deduction, 30% of NAV. $1,89,000. 24B, interest on borrowings. 50,000 they have given to us, and there is no such restriction as it is a let out property. For self-occupied, where you take NAV nil, there is a restriction. Otherwise, there is no such restriction. Now, so this is 3,91,000. This is your house property income. Are you all okay with this? Done?
Yes.
Yes, sir.
Okay. Let me come to the last question for the day. That is a good question. Okay. Question number 3. It says Ravi, a resident and ordinary resident in India. Okay, so he is an ordinary resident, global income would be taxable. Owns a let out house property. Owns a let out house property having different flats in Kanpur, which has a municipal value of 27 lakh. Okay. So he owns, see, look at this line. He owns a let out house property having different flats in Kanpur. So what he has is actually, he must be having a big building. And this building has many apartments, many flats it has. So they have not given the number how many flats they have. So there are various flats. Flat number 1, flat number 2, flat number 3, and so on. So on. I don't know, they have not given the number how many flats are there. But yes, he has a building where there are a number of flats and they are let out. They are saying it is a let out house property and they are let out also. Please tell me, will you calculate for each flat separately or you will calculate for the entire house consolidated? What do you think? Yeah, correct. So will you do like this, because we have done some portion in the last practice session also, 1/3 portion let out, 2/3 portion self-occupied or so, half or half. No, the thing is that only if a property has a multiple uses, then for each use you have to calculate separately. What does the term use means? Let's say for example, half of the portion would have been let out, other half could have been self-occupied. Then you have to calculate separately. But if it is being used as by one way only, how he is using it just by let out, it is not self-occupied. The entire property is let out. So in this case, you will actually calculate it at a consolidated level. Everybody is okay with it? Entirely. Correct, Sugandha, entirely. Rishi got it? Smriti got it? Entirely. You'll be
Yes.
calculating it entirely. Why? Because there is only one use. So I have actually mentioned in the classes that if it has multiple uses, then you have to segregate it. That for one use, computed differently, separately, for another type of use, computed separately. But it is being used only by letting it out. So it has given on hire, it has given on rent. So you have to calculate it entirely as one. Okay. How many flats are there? They have not mentioned. They have just mentioned they have different flats in Kanpur, which has municipal value of 27 lakh. So this property has a municipal value of 27 lakh. Standard rent 2980. Market rent of similar property is 30 lakh rupees. Okay. Guys, tell me what is the expected rent of the property? Everybody. Municipal value or fair rental value? This is the fair rental value. No, market rent is fair market value. 27 lakh or 30 lakh, whichever is higher. 30 lakh. Compared to standard rent, 2980, whichever is lower. So it would be 29 lakh 80,000 is my expected rent. So my expected rent would be 29 lakh 80,000. Okay. Now, second, annual rent was 40 lakh. Annual rent means the rent for the year from these houses. Annual rent was 40 lakh, which includes 10 lakh pertaining to different amenities provided in the building. What is amenities? Different facilities. So he might be having seen a building. There are facilities like lift facility. There is a facility like gardener. There might be a facility like security guard, etc. General electricity, etc. For that, he is charging 10 lakh rupees. So annual rent was 40 lakh, which includes 10 lakh rupees for the facilities. Now I want you to ask that, please tell me that whether this entire 40 lakh will go in house property or only we have to deduct 10 lakh and only 30 lakh should go in house property. The actual rent, what we should take? 40 entirely, or I should deduct 10 and I should take 30?
30.
So when they saying 30, are we saying 30? Smriti, Nishi, Santosh, is my voice clear now? And Krishna, you can get this PDF from the application. You can download the application. The link is in the description. You can download the application under free material resources. This PDF is available. Okay. Now, guys, again, I'm asking you, please tell me, I should take 40 or 30. You can might be right, you might be wrong. I should take, see, what are we doing? We are doing house property. That is the rent of building. If we are getting rent of other things, that will become our IFOS income. So this 10 lakh should go in IFOS, income from other sources. This is composite rent. Composite rent means that when we have let out a proper building with other amenities also, and if they are separable, it means that the rent which is coming for the houses, that will go in house property, and whatever is coming from for other amenities, that will go in IFOS. So 10 lakh would be our IFOS income, and 30 lakh we will take in actual rent in house property. Understood or not? Everyone? Santosh, my voice is perfectly fine now, or is it still lagging? Guys, the students were in Zoom. Okay, now the voice is mute.
You are audible.
I'm audible here. Give me a moment. Okay. Okay, coming back. So we have to take, guys, only 30 lakh rupees, not 10 lakh. So 10 lakh will go in IFOS income. Now, one flat in the property, one of the flat, we don't know how many flats are there, but one of the flat they are telling about. One flat in the property, annual rent is 2,40,000 of this flat, remains vacant for 4 months during the previous year. He has incurred following expenses in respect of the aforesaid property. So one flat was vacant where the annual rent is 2,40,000 of this particular flat. It was vacant. Okay. Tell me, the annual rent is 240. Tell me how much is the rent which we have received regarding this property, regarding this flat. Tell me how much is the rent which we have received. 4 months rent we have not received. It was vacant. So it means that this particular flat, they are not talking about other flats. We don't know how many other flat, the number of other flats, how many flats were there. But they are telling me about one flat, that this one flat was vacant for 4 months. So it means that this flat was let out for 8 months, and this flat was vacant for how many months? 4 months. Can you tell me how much is the rent I have not yet received of this particular 4 months rent we have not received? So the actual rent we were taking of 30 lakh rupees, I have to deduct because we have not received 4 months rent. Can you tell me how much is the amount which we should deduct from here? Annual rent was 240. It means 240 was the annual rent. For 1 month, how much is the rent? Divided by 12, 20,000 rupees. So 20,000 would have been
60,000.
4 months rent we have not received. 4 months rent we have not received. So how much rent we have not received? So first of all, guys, annual rent was 240. First of all, they are saying annual rent was 240. And we understand that this annual rent is divided into two parts. One is related to house property one is related to IFOS. Are you all okay with me? Why? Because here it is quite tricky question here. This is quite tricky adjustment, and it's a very good adjustment over here. You should understand this. So what does it mean? It means that, see, the annual rent was 40 lakh, which includes 10 lakh IFOS. So can I say that out of 40, 10 lakh, out of 40, 10 lakh was IFOS. Out of 40, 30 lakh was house property. So can I say that whatever the annual rent which question is saying to me, the annual rent which the question is telling to me, it is in the ratio of 3:1. Everybody understood that it is in the ratio of 3:1? Correct, Sugandha. It is in the ratio of 75%, 25% you can say, or in the ratio of 3:1. So whatever is the annual rent, out of the annual rent, 3/4 portion belongs to house property. 1/4 portion, that is 25%, belongs to IFOS. So first of all, guys, this annual rent related to this flat should be divided in the ratio of 3:1. Very good adjustment. 3:1. So 2,40,000, first of all, divided into 3:1. How much it is? 60,000 over here and 1,80,000 towards house property. Because every flat which we have given, it is actually a composite rent, because they have already mentioned that the total composite rent of the property was 40 lakh. Out of that, 30 lakh belongs to houses, 10 lakh belongs to other amenities. So if they are telling us about one flat, so we'll assume that 3/4 belongs to house and 1/4 belong to other amenities. Are you okay with it, everybody? So 1,80,000 is towards house property. And right now we are more concerned with house property. And please tell me, related to house property, now we have 4 months rent which we have not yet recovered. So 1,80,000 divided by 12, 1,80,000 divided by 12 into 4. How much it is? 60,000 rent I have not yet recovered. 60,000 rent related to house I have not yet recovered. Please tell me, should I explain it again or not? Have you understood this, or should I explain it again?
Yes.
Everyone, Smriti, Bala, understood or not? So this is a question of composite rent, where we are getting the assessee is getting rent for house also and for other amenities also. So we understand for house, whatever the rent we have, whatever the rent we receive, 3/4 is for the house, 1/4 is for other amenities. Other amenities will go in IFOS, but right now we are more focused with house property. So only 3/4 relates to house property. So it means that they have given that from this flat, there is an annual rent of 240. So we understand that everything is composite over here. So out of 240, 1/4, 60,000 will go in IFOS. And out of this, 3/4, 180 will go in house property. So 1,80,000 is the rent for the entire year. So for 4 months, we have not recovered. So for 4 months, if we have not recovered, so divided by 12 into 4 is 60,000 rupees we have not recovered. Now, can you tell me, my actual rent was 30 lakh rupees. Out of that, 60,000 I have not yet recovered. So my net actual rent will become 29,40,000. Are you all okay with this or not? So my net actual rent will become 29,40. Very, very good adjustment over here. Have you understood it or not?
Yes, sir.
Let me know. If you want, I can explain it again. Okay, good. Now, municipal taxes were 4 lakh rupees for the financial year 24-25. 10% rebate is obtained for the payment before the due date. So municipal taxes were 4 lakh and there was a 10% rebate also, he got it. So what do you think that how much municipal taxes he has paid? 4 lakh rupees or he got 10% rebate? So the municipal taxes paid by the landlord is not 4 lakh. He got 10% rebate also. So how much? 40,000 rebate he has got. So municipal taxes he has paid is 3,60,000 rupees. You will not take 4 lakh because 10% he is actually saving. So we will take only 360. Arrears of municipal taxes for financial year 23-24. Last year municipal taxes paid during the year 1,40,000 rupees. Please tell me whether we can subtract this also or not. Municipal taxes are allowed. Municipal taxes are allowed on payment basis. Whatever is paid during the year. It is not allowed on due basis. It is allowed on payment basis. So whether it belongs to this year, whether it belongs to any future year, whether it belongs to any past year, everything is allowed. In house property it says municipal taxes are allowed on payment basis. So we can deduct this last year municipal taxes also. So these municipal taxes were in arrear last year, but they were paid during this year. So 1,40,000 we can deduct. Which includes interest of 25,000. Such a good question. So many adjustments they are giving it to you. So it was an examination question. Quite difficulty level was little higher here in this exams, December 2021. But we should prepare this as well. So now what they have are saying is that 1,40,000 is the actually 1,40,000 is the arrears of the last year, but it includes which includes interest on arrears 25,000. Guys, whether interest on arrears is allowed? No, only municipal taxes are allowed. So how much we can allow from here? Not 140. We have to subtract 25,000 from here. So it is 1,15,000 will allow only of last year. So last year municipal taxes was 1,15,000. 25,000 is the late fees we are paying. Late fees is not allowed. Late interest is not allowed in house property. Only this much is allowed, 1,15,000. So for the current year it is 3,60,000, and for the last year it is 1,15,000. Total municipal taxes is 4,75,000. Are you okay with this 4,75,000? Should I repeat? Let me know if I have to repeat this. Are tell me. Clear?
Yes.
Okay, good. Good. Arub, yes means should I repeat or it's clear?
Clear.
Okay, good. So again, I'm just repeating it again. Out of 4 lakh, 10% we got the rebate. So we will pay only 360. So 360 it's allowed. Last year expenses also we have paid. Municipal taxes are allowed on payment basis. So it was 140. I would have allowed 140, but they were saying 25,000 is not taxes. They were interest. So only 1,15,000 was the taxes. So total taxes is 475. Lift maintenance expenses is 240. Okay, lift maintenance expenses is 240, guys. Is these are allowed under house property or they can be allowed under IFOS? Now there is a little here. There is a little IFOS chapter is also included in this question. So what they are saying is that because we have given other amenities also, and you understand for other amenities, lift, etc. will come in other amenities. So that will come in IFOS, and in IFOS expenses are also allowed. So out of 10 lakh rupees, 10 lakh what we have actually earned for other amenities, we are actually spending 2,40,000 rupees also. So 2,40,000 we can deduct from IFOS. I don't know whether we have to just see whether we have to calculate on the house property or IFOS. We have to compute the total income. Total income means that now we have to calculate IFOS also. So from IFOS, 10 lakh would be our income and 2,40,000 will be deducted. Why? Because it is the lift maintenance expenses, which includes a payment of 30,000 which is made in cash. 30,000 you have made in cash. You understand in PGBP, and I used to call IFOS also as a mini PGBP. You also know that in PGBP, more than 10,000 cash we cannot pay. Similarly in IFOS, more than 10,000 cash we cannot pay. So out of 240, 30,000 is paid in cash. So we will not allow 240 entirely. 30,000 will not be allowed. So only 2,10,000 would be allowed. I believe that you are all okay with this. Everybody okay? Now, salary of 88,000 paid to staff for collecting house rent and other charges. For house rent and other charges, we are paying 88,000 to the staff members also, because this was a big property. There are so many flats, and we have actually hired a person to whom we are paying a salary of 88,000 to collect the house rent and other charges. Please tell me whether these expenses are allowed under house property. First of all, tell me, are these expenses allowed in house property? No, in house property, only two expenses are allowed. 24A, standard deduction, 24B, interest on borrowing. So in house property, it will not be allowed. Now, because this 88,000 is to collect house rent also and other charges also, can we say that for house rent and other charges are in which ratio? Are in the ratio of 3:1. Agree? Do you all agree that they are in the ratio of 3:1? How? Because we have already computed it, that total annual rent was 40 lakh, out of which 10 lakh is for IFOS. So they are in the ratio of 3:1. So it means that this salary should also be divided in the ratio of 3:1. So 3:1, how much? 66,000 related to house, 22,000 related to other amenities. For IFOS, we can allow the expenses, but for house property, we cannot allow the expenses. So 66,000 will not be allowed because it is related to household. This is related to house property expenses, which is not allowed. But 22,000, 1/4 can be allowed under IFOS. So this will be allowed under IFOS. Are you all getting it or not? So quite a typical question of house property, and it is having good adjustments. Next, compute the total income of Ravi for the assessment year 25-26, assuming that Ravi has not opted for the provision of 115 BAC. Okay, everybody with me? Solution number 3. Computation of total income of Ravi. This is one of the difficult question of house property. If the difficulty level will come, this is one of the difficult question of house property. Computation of total income of Ravi. Assessment year 25-26. So we have income from house property also. Then we have income from IFOS also. So let us compute the income from house property first. GAV. How much is the GAV? GAV is higher of expected rent or actual rent, whichever is higher. Okay. Expected rent is how much? We have computed it also. Municipal value 27 lakh. Fair rental value 30 lakh, whichever is higher, 30. Correct. And compared to standard rent, it is 29 lakh 80,000. So this is 29 lakh expected rent. So I'm not writing it full. So expected rent is 29 lakh 80,000. Okay. How much is the actual rent? An actual rent is after vacancy. There is a 4 months vacancy also. So actual rent was 40 lakh, out of which 10 lakh was for other amenities. So first of all, we will say actual rent related to houses 40 lakh minus 10 lakh, because 10 lakh is related to IFOS. So it is 30 lakh. And minus the vacancy amount also. Vacancy amount was 60,000. How we computed the 60,000? We were to show this 2,40,000. 2,40,000 is the annual rent for one flat. But we have to take only 3/4 of it. Because for house property, it is 3/4. For IFOS, it is 1/4. So we have to take 3/4 into 1/12. For 1 month, we will get and for 4 months. Understood how I've computed it? I'm again repeating. 2,40,000 is for the entire house, entire flat. But we understand related to house property, it is 3 by 4. So I have done 3 by 4. So 3 by 4, after 3 by 4, I'll get 1,80,000 rupees. 1,80,000 is the rent for the entire year. For 1 month divided by 12. Divided by 12, I'll get for 1 month. And for 4 months, it was vacant. So 4 months it was vacant, 60,000, I will subtract it from here. So 30 lakh minus 60,000,
29,40,000.
it will be 29,40,000. Now guys, I will stop over here and please tell me how much is your GAV. Expected rent is 2980. Actual rent is 2940. I want you to tell me how much is my GAV. We understand it is expected rent or actual rent, whichever is higher.
2980.
2980.
2980. Okay. Guys, you understand if there is a vacancy, then you need to compute proportionate expected rent. Is there is a vacancy over here? The answer is yes. There is a vacancy over here. So you can't say that we have to compare this actual rent with expected rent or proportionate expected rent. With proportionate expected rent, then only we can say that which one is higher. Understood it? So do you remember this concept also? If there is a vacancy,
Yes,
then
sir.
we have to compute proportionate expected rent. Now the problem with this question is that we will not be able to compute the proportionate expected rent. Why? Because this expected rent is for the entire house. And we even don't know that how many units are there. We don't know how many units are there. We only know about this one flat. We don't know how many units are there. So it will not be possible to us to compute the PER, proportionate expected rent. But guys, we have other methods also. What we can do is, see, now please understand one concept. I would like to spend some time over here, 5-6 minutes I'll spend over here. See, we know that expected rent, let's say, expected rent is, for example, 40,000 per month. We say that let's say the expected rent. What is expected rent? Expected rent means that this property has a capability that this property can generate rent of 40,000 rupees per month. Okay. And if the actual rent is, the assessee is saying my actual rent is 50,000 per month. The assessee is saying that my actual rent is 50,000 per month. Please tell me the assessee is fraud or assessee is genuine? Assessee is genuine. Why? Because we will say, boss, because your property has an expected rent. It has the capability of generating only 40,000 per month. But the assessee himself is saying, no, sir, actually, I am getting a rent of 50,000, more than the expected rent. So we say that, sir, your GAV would be actual rent over here, whichever is higher. We say, no, whichever is higher. So we say that assessee is genuine. We will take actual rent over here. Correct? Because the assessee is genuine. Now, in this case, let's say the property is vacant for 5 months. So if the property is vacant, the assessee was genuine. But if the property was vacant for 5 months, so it was let out for 7 months. Correct? How much it would be? 3,50,000 rupees. But its expected rent for the entire year, 40,000 to 12, is 4,80,000. Is 4,80,000. This is what we used to do in some of the questions. That the expected rent is 480, actual rent is 350. But I used to tell you that these two are not comparable. Why? These two are not comparable because this is because of vacancy. Because of vacancy of 5 months, it is coming as low. So I used to tell you that in this case, compute proportionate expected rent, PER, and subtract the vacancy period. So if you will subtract the vacancy period, what you will do? You will, out of this 12 months, 4,80,000, this is for the entire 12 months, you will subtract 5 months. So what you will get? You will get 4,80,000 divided by 12 and you will subtract those 5 months. So for 7 months, how much you will get? 2,80,000. This is called your proportionate expected rent, PER. Proportionate expected rent. So I used to tell you in case of vacancy, compare your PER and your actual rent. And if your actual rent is higher, then your actual rent will become your GAV. Agree? But if your PER is higher, then PER will not become your GAV. Expected rent 480 will become your GAV. This is what I used to tell you. Now, please understand it logically. Logically, please understand. Guys, my assessee was genuine. My assessee was genuine. Right? So we should take his actual rent only as the base. We should take his actual rent only as the base. So we have taken 350. Why my assessee was genuine? Because it was only due to vacancy. When we are comparing these two, why this is coming higher and why this is coming lower, it is only due to vacancy. Because of the vacancy, this is coming lower. Had it been no vacancy, my assessee would have been perfectly genuine. Everybody is understanding it? My assessee would have been perfectly genuine. It is coming lower. Why it is coming lower? The reason is just because of vacancy. And if we will compute PER, this will become higher in that case, and my GAV will become AR. Now, coming back to this example, please tell me, if there would have been, now we can't compute proportionate expected rent over here because we don't have know the number of units, how many units we have. Please tell me, my assessee is genuine or not over here. If there would have been no vacancy, guys, if there would have been no vacancy, tell me this 60,000 rupees we would have recovered it. How much is the amount we would have recovered? Is 30 lakh rupees. Now tell me my assessee is genuine or not. The assessee is genuine. Why? Because his property has the capability of earning 2980. But he's saying, sir, my rent is 30 lakh rupees. He's a genuine assessee. Why it is coming lower? Why it is coming lower? Only because of vacancy. So please write it over here. Right over here. Actual rent is lower just owing to vacancy, just because of vacancy, just because of, I'm writing it, just because of vacancy. He's not fraud. He's not fraud. He's a genuine assessee. It is only due to vacancy, his value is coming lower. If there would not have been vacancy, this value would have been 30 lakh rupees. So AR is lower just because of vacancy. So in this case, therefore, GAV would be what assessee is saying, actual rent. Actual rent net. So in this case, it would be 2940. If you could have computed PER, PER would have been lower. PER would have been lower, but we can't compute PER over here. So in this case, this would be 29,40,000. You should not write 2980. You should write 2940 only. Have you understood it or not? So it is only because of the vacancy we are going low. Otherwise, if there would have been no vacancy, this value would have been higher. We have a genuine assessee over here. Okay. Got it? Less. So this is the second method. If you don't want to compute PER, you can compute it this way. That if this rent is coming lower, why? The reason is just the vacancy. Otherwise, if there would have been no vacancy, my assessee would have been genuine enough. Less. Municipal taxes paid. Guys, is there any municipal taxes paid? Yes. Municipal taxes paid. How much? For current year, it was 4 lakh minus 10%, 3,60,000. And for last year, It was 1,40,000, but
Minus 25.
25,000 is not taxes, it was interest. So 1,15,000. So 4 lakh. This is an examination question, little bit at a difficulty level. I acknowledge little bit at a difficulty level for the students, but since now you are doing it, you will find it easy now. Now it would be 4,75,000. Okay. So this is my NAV. $24,65,000 is my NAV. Now 24A standard deduction, 30%. $7,39,500. Is there any interest on loan? I didn't find it, any interest on loan. No, there was no loan, na? No, there was no loan. So my house property income will become 17,25,500. Are you all okay with this? 17,25,500. This is my house property income. There is no 24B is not there. So this would be my 17,25,500 is my house property income. Now, since the question is asking not just the house property, they are asking me the total income. That what is the total income of the assessee? They're asking me the total income. So we have IFOS income also. So income from other sources. Rent of amenities or facilities. 10 lakh is the rent for the facilities, less expenses. How much is the expenses we are incurring for IFOS income? So they are telling me that lift maintenance expenses is 240. So I will deduct 240. Lift expenses 2,40,000. Second, 88,000 was the salary, but only 1/4 we will deduct. Salary 88,000, 1/4, 22,000. Any other expenses, guys? Any other expenses or losses? Okay. So lift maintenance expenses were there. Oh, sorry, I made a mistake. 30,000 was in cash. 30,000 was in cash. So I can't deduct 240.
210.
Lift expenses 240 minus 30,000 because it was in cash. So 2,10,000 I can deduct. Salary was 88,000 by 1/4. 1/4 you understood? Everybody okay with it? Now, guys, what is this 10 lakh? Now all the expenses are done. Last one point, we might miss it. We might miss it. Students might miss it. One last point. See, what was this 10 lakh? 10 lakh was actually the IFOS income of all these flats. 10 lakh is the IFOS income of the amenities of the facilities of all these flats. Have we recovered entire 10 lakh or some amount we have not recovered of the amenities? Regarding this one flat, we have not recovered some of the amount. Can you tell me how much it is? Guys, try to tell me. You can tell me. There is a little calculation over here, but try to tell me this 10 lakh rupees. See what they were saying, that annual rent was 40 lakh, out of which 10 lakh is for the other amenities. So 10 lakh is for all the amenities. Please tell me, is there any bad debts out of it or not? regarding just the amenities. This will help you guys. This will help you. Try to calculate for me. Is there any bad debts related to any of the flat? Yes. For one flat, actually bad debts or we have not recovered. It was vacant for 4 months. It was vacant for 4 months. So we have not received that actually rent of the amenities. How much it is? For one flat. For every flat we have received it. But just for one flat. Guys, how much is the rent of amenities? For this flat, the rent of amenities was 60,000. Are you all okay with 60,000? 240 was the total rent of this flat. 3 by 4 is related to house. 1 by 4 is related to amenities. Amenities means facilities. Okay. 60,000 is for the entire year. But how much we have not yet recovered? 4 months. We have actually not received it because it was vacant. So 60,000 divided by 12 into 4. How much it is? 20,000. Guys,
20,000.
everybody understood. This is the thing which many students can miss it out. So 20,000 rupees. Krishna, I have taken that cash. I was making a mistake. Now I have taken that. So 20,000 is the amount which we have not received. So 20,000 was also actually we have not received. So 10 lakh we have, entirely 10 lakh we have not yet received because four months it was vacant also. So 4 months a flat was vacant. So how much is the total rent for the flat? Is composite rent was 240. Composite means for house as well as for other amenities it was 240. But right now we are talking about amenities. We are talking about IFOS. So 2,40,000 into 1 by 4. Understood 1 by 4? 60,000. And out of the 60, 4 months we have not received. So 20,000 we have not yet received. A very, very good question. There are so many things which are there in this question. That is the reason I picked it up. So now, finally, you will get your IFOS income. 10 lakh.
7,48,000.
Correct. Well, 7,48,000 is your IFOS. Now, you don't have any other income. You have this and this. So this is 24 lakh. 73,500. This is GTI minus chapter 6A deductions ATC to ATU. We don't have it right now in this question. So my total income would be 24,73,500. Everybody understood it or not? Quite a good question. Little bit at a higher difficulty level. But I believe now you got it. Understood? So I think we'll stop here and we'll continue tomorrow. So as per the schedule, possibly tomorrow, anybody idea which session we have tomorrow?